The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, today we're here with a very special guest, Adam Cochran. Really needs no introduction. Maybe one of the most controversial figures on Twitter. Would you agree with that?
Yeah, I never thought I'd hear myself described as the most controversial, especially in today's climate. That's a pretty big accolade, but yeah, probably seems reasonable.
Why do you think that? Like, you have a massive following. Why do you seem to really get under people's skin? I think, and I mean, it doesn't bother me. Like, I actually kind of find it quite endearing. I wouldn't have invited you on if I hadn't found it quite endearing. But you do seem to have the ability. I think. Okay, so my read is that I'll tell you, and you tell me if you agree with this.
Sure.
Like, first of all, you write absurd threads. So like, just the length of the threads obviously is something that some people find kind of ridiculous. The other thing is, a lot of times, anything that comes up, you tend to kind of have the appearance of an expert opinion on nearly immediately. Sure. And I mean, it's not to say that you're not you may not have good thoughts on it, but it also you also let people know your thoughts immediately. Would you agree with that?
Yeah, absolutely. So I think it's twofold. One, anytime you're online and a presence, whether you consider yourself an influencer or content creator or something like that, you are a caricature of yourself. And when we think about it from marketing principles, you can try and fight that or you can lean into it. And so one time on Twitter years and years ago, I wrote something that was really long. And I think it was a list of all the companies building on Ethereum at that time. And somebody made a joke about you're like a threader. That's your thing. And people got really annoyed, and the rage retweeting of it was actually super viral and the most viral impact. And so I kind of leaned into that. And there were times when I made the threads purposefully longer for the sole reason of that hate retweet that is an amazing amount of virality. But then also breaking out the content in these bite-sized ways where you're putting thoughts in an isolated thing allows certain thoughts to be retweeted where maybe a long form wouldn't. And so by misusing the platform on purpose and leaning into that caricature, there was this nature of virality, and it still holds today that my most popular content goes viral usually by the people first who hate it, and then it's discovered by the people who like it afterwards. The other thing that rubs people the wrong way is definitely I am happy to share my opinions. I have an absolute addiction to learning, and it's my neurodivergent fixation. If somebody asks a question, I have to research it until I know it. And one of the best ways I synthesize that information is by explaining it to others. And I'm really good at diving into research from kind of an academic background. And I want to make sure I have an understanding of everything that goes on in the world, because anything can affect the way we invest or our daily lives. And so it seems daft to me to put on these blinders to the world and be like, oh, well, I'm not an expert in that. I can't form an opinion. Just read a fucking book, read an article, learn about the thing. But I think people mistake that as me saying I'm an expert in it. And I'm not. I'm saying the only thing I would call myself an expert in is learning and synthesizing stuff really quickly. And anything I post on a topic is probably no better than an undergrad student who's studying that thing, right? It's not some career professional. It's not someone who's a PhD in it. It's not someone who's done it for decades. But I go and source a bunch of information and papers, and I read it because I'm addicted to that, and I synthesize it because I think there's a lot of other people out there who have that thirst for information and not time in a day to go and get it. But I do think it hurts people.
I think I would also add that it doesn't seem to me that you get super butthurt when people screech at you. You have you're resilient, you bounce back, there's some resolve. You're like a golden retriever. It's very endearing that it's not, you don't take it wildly offensively. you have like some type of armor on that. It's like, yeah, like somebody rips you for writing a 200 thread tweet and you wake up the next day and do it again. You know what I mean?
Yeah.
It's like it takes some resolve there. Like keep at it. So I think but I honestly think that annoys people, that it doesn't bug you that people like shit on you constantly, you know?
Yeah,
like
I mean, I'm used to it. I've always been different, and so after decades of that, you get pretty used to it, and you get pretty comfortable with who you are. And people out there on the internet are going to say nasty, horrible things no matter who you are. Like, I don't think you can follow an account that has 200K followers and not find some nasty stuff out there. And most of those people are in a bad place themselves. Like when I was younger, I used to be a absolute jackass towards some people. I actually have a story where one time I accidentally bullied Vitalik unknowingly. And that's a great story we can get into. But personal growth kind of changed who I am over time. And I realize and empathize with people who are lashing out. And so I've been called worse by better, and I'm not going to let it get to me.
You were so was your entrance into crypto through trading, like specifically? When did you actually start trading full time?
I was in crypto back as far as 2013. I actually worked at a Bitcoin exchange in Canada. I had organized some crypto meetups. So I've been in the space for a long time. And my intro to it was, some Hacker News posts about it and playing around with it early on. And kind of going back and forth on if I thought Bitcoin made sense at the time. I wasn't like super sold. And one of the biggest hook-ins for me was actually Dogecoin early on, and being a part of that community and kind of the fun that it had around it. And this idea where Dogecoin was really used as money in a way that Bitcoin wasn't, because everybody was tipping one another. They were paying for art. They were sponsoring things. Nobody was buying it to get rich at that time. It was buying it to use it as a currency, which is a trait it's unfortunately lost. But seeing that actual usage as like this fun internet currency kind of lit a spark there.
Yeah. But then you were actually in the order books, like trading full time. When did that start?
There was trading early on, quasi full time, and then I walked away from it a little bit and did stints at startups. And the full time kind of full scale at the largest has probably only been in the last like 5-6 years. But early on, there was definitely trading with the ups and downs, though. Yeah, I don't know if I would have called it full time back then. It was lucrative, and at the time, I was probably making more money in stocks than I was in crypto.
Interesting. And then you became what, like basically a full time DeFi investor, or like did you kind of start with DeFi Summer and like become more of a, I don't know, angel? Like, do you have your own fund?
So I had worked for a startup called DuckDuckGo for quite a while.
I know DuckDuckGo.
And while I was there, I was still investing in the space, still doing my trading on the side. And it had reached a point where I could have been independent long before I did, but I enjoyed the problem I was working on there. And eventually kind of left to work on things independently, day trading and investing in an angel capacity with my own money, but at a scale that was much larger than average angels. I don't talk about the scale of the money very often, but one thing I've put out there publicly in the past was like the notional volume of turnover I did on FTX that one year was like 26 billion in notional volume. As an
you were like
trader.
weren't you like on the top 10 leaderboard on FTX?
Yeah.
Well, so I mean, clearly you have done a good bit of independent trading. Yeah. So then, like, what are you working on now? What do you do? I honestly don't really know what you do.
I tweet. I do whatever I find interesting and invest in whatever I find interesting. And work on and tinker on side projects that I find interesting. I've kind of been afforded the ability to explore in a bunch of different avenues and look at what do I think are the critical problems in this space and other investing spaces, and spend some time managing my own capital. But other than that, focusing on what do I think are the solvable problems in this space and how do I think we get there. And because so many teams and so many investors have these external dependencies, whether it's LPs or whether it's a need to get to revenue at a certain point in time, a need to have a profitable token, they've got this forcing function that means there's only a certain sliver of kind of projects that they can look at. I don't have that same external pressure or dependency. So I can look at something that has a longer capital return time, or doesn't have a capital return time in the same way, but that I feel is crucial to the space in a way that it's a rising tide that's going to lift, my other bags. And so I think there's a lot of things off the beaten path that I can spend time thinking about and focusing on.
Okay, so like, what are some examples of that? And also, you can just talk about you mentioned solvable problems in the space. Like, what is exciting to you right now? In crypto specifically, I would say.
Yeah, so I think as we look at the crypto space right now, every VC fund is just an infrastructure fund that's complaining about the lack of consumer apps. And I think this bridge into how do we actually engage consumers in a meaningful way is a very interesting thing. But on the flip side, the infrastructure that I find interesting is actually much lower level. Like right now, I'm fascinated with understanding the bottlenecks in the EVM. And while everybody is kind of building vertically in all these different layers, how could we fundamentally go back and do redesigns of the EVM L1 if we started from scratch with everything we know now, right? 256 bit word size, while bringing that down to 128 or something that's a better optimized for hardware architecture would allow a lot more hardware acceleration. And is that something we should be more exploring? Those questions are interesting because the investability of the idea of like, let's go rebuild the L1 from scratch doesn't make sense, because Ethereum will probably not ever directly adopt that. Or if it does, it will be the biggest nightmare switchover imaginable. But it might make sense for us to continue to see how do we improve the core of an EVM at the L1 level for future projects. And I worry that we're in this money chase vertically up the stack, because that is what makes sense near term and is causing us to not look at some of these fundamental questions that we were investing in previously. Like there was a lot of iterative design during the L1 wars of how do we improve the L1. And now we've kind of gotten away from that. There's a few examples of parallelization and changes to database architecture that are being explored, but we're not asking as many fundamental questions about the design of the actual EVM at this stage.
So what do you think of the Ethereum roadmap and maybe some of like the different factions of directions that people want to go with the Ethereum roadmap? Like what are your personal thoughts?
I'm quasi-technical, but sometimes I feel I'm never technical enough to have had a deep dive into enough facets of the roadmap. And maybe no one is. The fact is the roadmap has gotten so convoluted with so many different components and factions that it's really hard to have an informed conversation about the trade-offs, because you have to be so deep in every single one of them. So my focus has been around kind of some of these concepts of sharding, of base rollups, different aspects of that. One thing on the roadmap that we see a faction push for that I'm stoutly against is this idea of changing the issuance curve and messing with the economics so prematurely just because they don't like the price. But when I think about the roadmap at large, I think moving towards a light client infrastructure is critical. And I kind of agree with Vitalik's take of the thing that makes Ethereum special is the ability for anybody to be involved and validate. Like we can't just push up the technical requirements. Because my biggest point right now isn't that things like, there's an argument right now that the DA and the blob space and things like that, we're realizing maybe L2s don't want to pay for that block space and that data availability in the way we thought, and that's not what Ethereum should be selling. And I kind of disagree with that, because I don't think Ethereum is a commodity product. We're not selling block space. We are selling the most secure and reliable block space. It is a premium product, just like Apple isn't the most performant phone in the world. What Ethereum is selling is the most decentralized, secure system that if you're a nation state, if you're two banks in different jurisdictions, if you're a large broker who needs confidence in the finality and the decentralization of what you're settling, you want to use Ethereum because it is the most robust, it is the most defensible against state actors, it is the most secure, and you're willing to pay a premium for that. And I think repricing the model of how we price data availability and settlement on Ethereum is kind of a way to better capture the actual value of what we're selling. So I'd love to see focus on that within the roadmap and evaluating, are we pricing things correctly for the future vision we have for Ethereum rather than this commoditized race to the bottom?
Yeah, I think that was a sufficient answer. Do you think that, do you feel that the roll-up centric roadmap has been the direction to go? And also, do you think that, this is a two-part question, do you think that the L1 has been sort of stagnated as a function of this L2 roll-up roadmap?
On roll-ups, I am still to this day undecided, because I don't think the current version of roll-ups is what a roll-up will be and should be. And so it's kind of hard to evaluate the roadmap based on what we have today. And maybe a world of based roll-ups or the next generation of roll-ups make more sense. I don't think in its current iteration, the values and incentives are aligned as well as they should be. And I think the focus on the L2 roadmap does detract from L1 development and raising questions about what we can improve at the L1 layer, which I think it's premature for us to shift so much focus away from that. I think there's still a lot of gains and benefits to be made there. And I think right now what we're seeing is a lot of other projects kind of build up their own L1s by looking at the things that are being ignored, such as database optimization, parallel transactions, things like that. But whether focusing so much on roll-ups versus better sharding approaches or a built-in Bloom filter to help us analyze what transactions can be parallel or things like that, I don't know that L2s right now today are the correct way to focus. The only thing I will say is that they unlock a very interesting business model that I think mirrors the internet, where you don't directly use the internet. Like you're not plugging into your own piped wire and setting up a server on the internet. You are going through an internet service provider who bundles that service up with a bunch of like-minded services, bills you on a monthly basis, and gives you infrastructure and support that you could never get otherwise. And I think, seeing Base as an example of Coinbase being like the ISP and delivering this bundled, specific, focused service to consumers is a very interesting model in how we think about that adoption. And I think that could be very valuable in that way by letting brands have ownership of a relationship with the customer and kind of building tailored products. And so I'd say that's the only thing I'm really sold on the L2 side.
Yeah, I think I've come around to thinking that Base is probably going to crush it. But I did see you one time tweet something, and I'm kind of drawing conclusions from this, but you said that the processing of transactions on L2 is really where the value lies. I would interpret this as a lot of the value is in the execution. And I saw you also tweet about based rollups, and I'm interested, like, have you dug in and have you decided that based rollups are, I don't know, likely or feasible?
So I think that right now the value is in transactions, also because we underprice Ethereum's L1 DA and block space. I think we underprice what we're actually selling, and we're not pricing it based on that actual perceived value. I think that's where that gap comes from. So I think there's two solutions. One is better pricing, but then the other is how do you capture the values of the transaction? Will transactions always be where the value is? I'm not sure. I mean, we see it in stocks still with like payment for order flow and dark pools benefiting from this arbitrage. But when I think about non-financial transactions, there becomes infinitely less of that. And so in a world where we think, if we look at the internet, what percentage of transactions on the internet are financial versus non-financial? And can we see a world where blockchain gets there? So if you have a blend where, only 1% of transactions on a network end up being financially related, that will dramatically change where that value is. So I think right now it is in the transaction layer, and I think auctions and ordering, MEV extraction, arbitrage, all that goes into that is where you capture a lot of that right now. And I think based rollups, and to be clear, I don't mean the most technical definition of based rollups. I also mean all of these teams that are building something that's quasi like a based rollup and trying to shoehorn it into that name. These allow for a better incentive alignment to give back more value to L1 validators and stakers, and therefore Ethereum indirectly. So I think it is worth that experimentation happening. I'm hesitant to always say to sell myself on anything being the solution, but I think it is a viable path forward. I've talked to like 30 different teams who are working on solutions in this space. So I know we are going to see solutions come live in this space, but it will be a lot about the specific implementations, how those economic models work, and then how do they solve for adoption. And the interesting part about the based rollups moving towards different standards does become onboarding becomes a lot easier when you can move more seamlessly between these things than standard L2s.
Yeah. When you talk about non-financial transactions, what you said, like if 1% of a network's value comes from non-financial transactions.
Sorry, other way around. 1% coming from financial transactions.
Oh, okay. If only 1% come from financial transactions, what are the other 99%? Because like the way that I look at Ethereum functionally, and also all of the L2s, is that it's all in some capacity financial transactions. Now, like gaming or social fi may have less like order flow, or like ordering may be less important, right? Functionally. But at the same time, like it's all financial transactions. So that I kind of wonder, like, what is a network where the bulk of it is non-financial look like, and what would be like the viable use case for that?
I think part of it is that we've done a really bad job at exploring that because we view the financial side as so lucrative and so quick in its returns. And I think a lot of networks start that way. And when we look at it, there's a lot of things we want to put on chain, from data to attestations to logins. You could see a world where you want to have hosted miniature websites or emails or things like that. We're seeing some of that exploration on Solana because of its different models and data availability. Just because we are financial now, I think it would be a mistake to assume that decentralized, censorship-resistant networks will always be majority financial. I think that's a critical part of it that we're trying to solve. But I'm not sure I'm convinced that that is the complete vision. And I think if you had viewed the internet early on, where financial processing was a large part of the internet once it came about, but we would have never, back in the early 90s, we never thought everybody was going to have multiple social profiles churning out content on a constant basis. We would have never imagined TikTok and YouTube Shorts as these monoliths of the internet. I think there is definitely a world where we see blockchains more mirroring the internet in a variety of content and use cases that are non-financial. And I think we have to build for that possibility, because once you sell people space and processing, they are free to put anything on there. And so, like, unless you're building a financial protocol that only processes financial transactions, like some ISO 2022 network, you're giving people space and processing power. They will put other content there, and eventually some of that's going to take off. And so that blend will change. And if we make economic assumptions based on the blend only being financial, I think we set ourselves up for disaster.
Are you an Ethereum maxi? I heard you just mention Solana. Like, for whatever reason, I've considered you to be an ETH maxi, but I don't know if that's true.
I mean, I was one of the first people to suggest that Solana had viability and fit into this multi-chain model. I'm not a maxi, but I think I'm sold right now on Ethereum being the only chain that's executing correctly on the path that it has for product market fit. I think early on, I was an advocate of this model where Solana could be a processing dedicated layer that intertwined with Ethereum, and designed out what I'd call this OSI model of blockchains, where much like the internet, we would see different blockchains fit into the spots that different protocols do, right? Like we don't use FTP for everything. We don't use email protocols for everything. We have a patchwork of protocols to go together for the internet. And I viewed kind of blockchains in the same way. But I think more and more chains, as they compete for financial incentives, they want to be chains for everything rather than dedicated protocols. And I think that's a misstep. So I'm not an Ethereum maxi. I think there can exist other protocols. But I think as far as the core important settlement layer that maximizes decentralization, that's Ethereum's to lose at this point. And I think most other teams that are trying to be an Ethereum alternative are off path and would be better focusing on some sort of niche specialization.
Yeah, I mean, I think that at least the non-incumbent argument would be that settlement isn't that valuable, maybe. Like, this is what Anatoly would argue. So I don't know. I think that it is, yeah, I guess it's like divergent paths.
Yeah.
It does seem to me, like my personal opinion, looking at Ethereum, is that the value accrual is probably not there unless a lot of activity is brought back to the L1. Like some of the assumptions you kind of have to make to see ETH be net, maybe not even deflationary, but just sort of like net neutral, or there has to be like a lot of extreme increase in activity. And like, it doesn't seem that blobs, I don't know, it doesn't seem that blobs can really, like even saturated blobs, I don't know, they make ETH deflationary again, right? So like that would be how I see it.
Yeah.
What are your thoughts?
I think that a repricing mechanism matters. I think we're far too early in the L2 model with far too few L2s all doing the same thing to make sense. I think those L2s are going to look a lot more like apps and specific brands in the future doing specific things. And I think that will change. Based rollups, better aligning those incentives and giving validators multiple streams of income for their amount of stake begin to change that calculus as well. So I don't know that necessarily you need to see a 10-fold increase or a 100-fold increase in the raw activity taking place on Ethereum, so much as better price it and better align the demand for staking the Ethereum. Because I think that becomes an interesting part of these models. So I think there are pathways forward to better bring that value capture without it needing to be a lot of retail spamming L1 transactions.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Do you believe in the like essentialness? I don't know if that's a word. How do you believe in the monetary premium idea being critical? Like with the notion that ETH roll-up centric roadmap, for example, has not necessarily scaled Ethereum, but it has scaled ETH, the asset, and exporting the monetary premium is functionally where the value is derived from. How strongly do you feel about this idea of a monetary premium? I'm just context. I'm like more on the Bitcoin side, so like I feel pretty strongly about it. But I'm just curious if you think that ETH has successfully garnered this monetary premium such that it can export it now.
Maybe. So I definitely trust an L2 more if Ethereum is its base asset, because it does have that additional level of security through the TVL and better alignment. But when I think about, and I believe the premise of this monetary premium, because it's we see it with the US dollar, right? And the US dollar supremacy.
I mean, it's
and
like functionally true. Like Anatoly will deny this, right? Like, and I've talked to, just side note, I've talked to him about this, and I asked him, he said like, monetary premium doesn't exist. And I was like, okay, well then how do you explain the difference between like the utility value of gold and what gold sells for on the market? And he says it's supply and demand. And it's like, okay, like we're not going to come to any type of reasonable agreement here, because like, you're right. It is at the end of the day, like supply and demand of the market, but there's clearly a value beyond the utility value of gold, right? So, but
the value is I can go almost anywhere and hand somebody a piece of gold or a US dollar and have it accepted in a way that I can't with other currencies. That is what drives the demand, right? So he's not wrong, but that is a function of the monetary premium of those assets. So I do think Ethereum is heading there. Whether I think that's important or not, I don't know. Maybe akin to that, I don't see it as needing to have the monetary premium in the fact that I can spend it in every ecosystem, so much as this maybe reliability premium, where staking it as collateral for confidence in every ecosystem, I think is valuable. And I think that could be a really interesting use case where no matter what L2 I'm on or sidechain, staking Ethereum for pre-confirmations or slashing in governance voting or etc., that level of reliability and exporting that confidence in the kind of stored value asset from the L1, I think is interesting. I don't know if I would directly call that a monetary premium, though. It's something akin to it, but in its own right.
I think any type of like staking or contracts denominated in ETH is net positive for reducing the velocity of unstaked ETH effectively, which some would argue like some people will just kind of disregard this model altogether, but some would argue that is again a function of like a monetary premium, like having some so like, okay, talking about Solana, what do you think?
I think Solana does a lot of interesting things very well. I think they're too focused on some of the wrong areas though in product market fit, and have been victims of their own success in what they've built towards.
Go on.
I mean, it's become a case of just a meme coin casino where there hasn't been a lot of innovative protocols. There's been rebuilds of Ethereum protocols. There has been some novel stuff, and I will give that credit. And I do appreciate some of the deep in physical infrastructure explorations that are going on there. I think their team's done actually a fantastic job on usability and focusing on how do we deliver blockchains to customers, such as like the Solana phone initiative, even some of their efforts around how do we brand and explain different technologies and terms. That's really good and something that Ethereum is terrible at. I have a lot of respect for Tolly and what he's built, but I have for many years argued with him that I think trying to be this monolithic everything chain is not the product market fit, and that, you know, Solana could have had this bright future as a processing layer that takes on the complex processing that other chains, which have different bottlenecks, cannot. I don't know the pricing future of Solana expands dramatically from here. You know, another 10x or 100x.
They can just I think that Solana in its current form, Solana people are much more willing to accept that Sol may be valueless. Honestly, I mean, I say valueless. That's a strong word, but they can kick the can down the road, right? Like they still have unlocks. It's like going to be inflationary. They don't have to come to terms with this. Like,
I think it depends on what you mean on Sol people, right? Like, yeah, sure, the Solana Foundation and the developers can do that, but I don't think the bag holders are going to feel the same. I don't think the people who are constantly in my comments calling me an F-maxi are going to feel the same when Solana has these large unlocks and doesn't have the same economic model. So I don't know that all Sol people feel the willingness to have valuelessness in the asset.
Well, okay, I will. Maybe I didn't phrase that correctly. Well, first of all, I stand by them being able to kick the can down the road for a while, right? Sure. Like they still have a lot of locked, tokens. The foundation still has a lot of tokens. Like they can just keep going at attempting to go at the speed of light until, they kind of hit a roadblock with like, okay, what is this token worth? But Tolly says like there should be 100 assets on the L1 that are more valuable than Sol, because that's where the value is being driven from the applications. It's a little bit, it takes a little bit of thinking, and I don't want to say mental gymnastics. I don't think that's the right word. I think it takes a little bit of like thinking in a certain way in terms of like the application layer versus the protocol layer there to come to that conclusion. But I think it's reasonable to say like the value should be derived from the applications that are built atop it.
Yes. So value should absolutely be derived from the applications, and having those applications is critical. Like the internet is nothing without the websites upon it. But the distinction here is that these are not isolated systems, a blockchain works on the foundation of economic security. And anytime you have a system where the sum of its parts are too dramatically greater than the economic security, which is securing and verifying them, you are either susceptible to an economic attack where it makes sense for someone to buy up enough of the economic security that they influence the network, or you are too centralized for somebody to do that economic attack. Like you cannot have a system where there is several orders of magnitude more value than the securing factor, unless you're making significant trade-offs in centralization.
Yeah. You've been pretty, well, I don't know if this is a frequent occurrence, but I've definitely seen you be pretty outspoken about not liking meme coins and the degeneracy. What are your thoughts there? Like maybe what bugged you about this?
There's almost like these subcategories of meme coins. Like I don't have the same reaction to Dogecoin, also biasedly because I have a soft spot from starting there. But it was a cultural thing that people did for fun long before it was a rat race to try and make money off of it. Like the earliest people using Dogecoin did not think they were going to get rich off of it. And that was a very different thing. And Dogecoin had a roadmap and a plan and things to do. It had tooling, infrastructure built around it, communities. Now the meme coin trenches, if you will, are I slap a logo on some funny looking coin. It does 100K and everybody gets dumped on, right? They're not anything that has this longevity, and it is just value extractive gambling. And I have no problem with people choosing to gamble when they know what they're buying into. But the lack of transparency, the abuse of the system, the front running, the insider groups, that's just some seedy bullshit, right? And like if you as an informed adult want to, bet 50K on a coin flip and you know the odds and you know it's a fair game, that's your choice to do. But when we're preying on people's desperation to get by and to make wealth in a broken economic system, and you're just pumping out shady coins that you know are going to be rugged within 20 minutes, that's just jackassery and the kind of stuff that brings a negative lens to this space.
Like, I'm sure you've heard these kind of arguments. I don't have to repeat them, but like, I think that obviously this is sort of a pushback on all of the coins that did have projects last cycle also going to zero. I mean, like I would argue that almost all the DeFi coins, at least now, have they kind of preyed on people's maybe belief that we were building this. And okay, maybe it could still be true. I'm not making any assumptions yet, but it's not like all of these DeFi coins have greatly outperformed. I mean, most of them have gone to zero as well.
Right. I think the difference there is like if I put on my VC hat for a moment, 99% of startups that you invest in will fail, right? And you hope that one does like 100x, 200x and makes back your portfolio. That doesn't mean they didn't try. That just means it's really, really fucking hard to build a company, right? And I think one of the I hate investor protection laws. Like I think many of them are just incredibly stupidly implemented. But the one thing I do appreciate is that most people don't understand how hard it is to build a business and how you could do everything right and still not succeed, and what the actual success case odds are for companies. And so people are YOLOing, their entire net worth into one bag, hoping it works out. Well, statistically, most of these businesses will fail. In the .com bubble burst, 99% of websites failed. That doesn't mean Amazon didn't succeed, right? And I think the difference there is these teams, many of them, while foolhardy and inexperienced, were trying to deliver something and failed at it, rather than everybody thinks a lot of them are just what they called slow rugs. And some of them are, but many of them are just teams that took on a larger problem than they were able to handle, or in some cases were perfectly capable of handling, but did not pan out to a successful business for a multitude of factors. And I think that's the real difference between meme coins and this failed DeFi cycle, is that many of those were real attempts. They just didn't work out.
But the argument is like, should those people even have made any money at all? Should those people even had the ability to get liquid on something that fails this quickly? I mean, this kind of goes to like just tokenization in general, but that would be how I see it. Like, I'm not sure you should be able to make a lot of money if you haven't built something extremely successful. And I think that would be the argument against a lot of DeFi projects, is founders and VCs to some extent too got very wealthy, and it's like at the very least the tokens have not done much. So I don't know. Like,
I think the trade-off on that is, I agree with the sentiment, but you try launching a DeFi project without a liquid token, and you will get spammed by consumers saying "when token," and then when you launch the token, they'll be mad about the token. And so it's this trade-off. Like, if you as a consumer want the token, you have to be taking on that risk profile of there is liquidity here for that team and that founder, even if the deliverable ends up underwhelming, right? And you can't really have that both ways. If you don't want to take on that risk, if you don't want them having the liquidity until the success case, don't have a liquid token, have some sort of optional success token, soul bound, non-tradable. But that means you're locked in as well.
What applications with a token or without a token do you think are really promising? Like, not talking about like the app layer. Like, what are you like quite bullish on in terms of accruing value? Maybe
I want to see successful games, but I am so tired of seeing overly funded games made by people who don't know how to build games. I need to see games that are games first. Then I think the things that interest me are in the topic of curation, because I think you can do a lot of interesting things with tokenomic models and curation on the web. Like, I would love to see a Web3 version of StumbleUpon that rewards based on its success cases. And then I really want to go back to like these early stages of the web. And, one of the things I've been debating doing a little hackathon project on was taking like the old Lycos, Tripod, AngelFire kind of era of websites and seeing how I could compress those on chain so you could have on chain super basic HTML websites and kind of build these clusters of communities. Because I think we need to give people better ways to express themselves and connect in Web3 to give it the staying power, because we see that the social graph of Web2 is what a lot of the staying power is on the internet. And I think as we begin to push that into Web3, we start to build richer versions of interaction that allow us to stay and build communities that don't necessarily have a financial incentive. Like we might be willing to lose $5 a month to maintain a website that connects us with other people of a shared interest. And so anything that breaks that financial interest model where I feel I have to be earning and I'm open to spending because I'm gaining something non-financial, I think those are the critical areas for us to be focusing on now at the app layer.
Are you less bullish on DeFi now? Is not as interesting to you?
Not less bullish. I think that some of the winners become obvious at this case if the networks continue to scale because they have such critical mass. I think if somebody brought me like a novel DeFi design, I'd be super excited to invest in it. But what I see is a lot of pitches of, hey, we've improved on Aave, right? It's very iterative design rather than novel.
Yeah, for sure.
I think novel is still very interesting. I'm just not seeing as much of it these days. But I think there's a huge amount of potential there still.
Do you think the obvious winners in your mind currently end up making a lot of money? Because I'm not convinced on this personally. So that's why I ask. Like of DeFi.
Do they make a lot of money or do token holders make a lot of money? What's the question?
I don't know. Maybe both.
Because I think some of them can make a lot of money. And I think in a few cases, there are token holders that will make money on those tokens. But I think a lot of them are set up where there's a commodity problem, arbitraging rate markets and things like that, where it's going to be really hard and really competitive to make money. You need tremendous scale. And then by the time a DAO takes its cut to pay all the engineers, what's left over in residual for the token holders becomes very challenging. So I think if the current winners are going to make money to justify the multiples they're at right now, it will be because we bring most of finance on chain in a critical way, or they find better economic models of what people are willing to pay for in like a freemium model. Like, is there something on Aave where I'm in the rate markets and I'm giving up X% of yield to Aave for facilitating that, but I want on-chain tax reporting and they have a supplemental tool for that and I can pay it with my Aave token, or they have an alerting or automation function that I can pay with my Aave token. Maybe there's something like that that expands that margin in a meaningful way, but I don't know what that looks like today.
It seems like even applications are, at least in the design of crypto, that I think a lot of people hope for, where there's user surplus, maybe the design is like uniquely bad at making money, at being extractive, right? And in a sense, it has to be competitive. So that's why I think you really do have to bring all of finance on chain to justify
you either
a
need
lot
to
of the
bring
valuations, and then it becomes increasingly competitive, right? And like that's why, I mean, a lot of this is one interesting aspect of like regulatory clarity to me is like once we get some version of regulatory clarity, like Goldman can put
Goldman's money market is like there tomorrow. Yeah, exactly.
So that's why it's like it's interesting. I'm less convinced on any like certain. Go ahead.
Yeah, and that's why I come back to this point. Even with Ethereum DA, is like if you commoditize things, you're going to race to the bottom and you will lose, right? I think the only thing that's interesting to me right now is the teams that can do something novel and have an innovative value add that shows that team is willing to continue to ship new and innovative features that others aren't. Because if all you're doing is building a better mousetrap, maybe you win, but what margin do we have left to eat, right? And so I think it is in doing things that are novel and things that fill us up in non-financial ways. And when we like everything financial will get commoditized, like all rates eventually are converge on whatever the prime rate is plus a risk delta, right? Like that's every rate you see is probably accurately priced of prime plus risk. And they'll all converge that way. But will things that I pay for because it's an emotional value do that? No, right? And so what out there am I willing to pay for? What can I spend gas transaction fees on that fill up other facets of Maslow's hierarchy, right? And those become interesting plays. Not all gaming currencies trend towards zero. Not all social advertising trends towards zero. Because these things are things that I maintain for reasons other than money. It is very hard for something that is an objective financial KPI to not trend towards an arbitraged rate.
I would agree with that. What do you think of like the regulatory environment? I know you tweet about this a lot. I don't actually know what your takes are, but you seem to have a lot. So I was going to let you ramble if you want.
Yeah. So I think Gensler is the worst. Let's start there. Gensler's approach of legislation by action and these warpings and abuses of the words he chooses in press releases versus in the actual legal action that create a chilling effect in America are heinous and ridiculous. And it is entirely motivated by his own political ambitions. And I hate it. It's a great example of everything a regulator shouldn't be. I don't like a lot of the regulatory restrictions we have, but I do understand there's also a ton of scammers in this space that absolutely fleece people over. And so I get where some of the hesitancy comes from. I think we need to do a better job, though, as an industry in engaging in these political conversations and educating. Because if you think about it, there's almost this review bias problem where like when Yelp first launched, they wrote a lot about this of like, oh, everybody hates all of America's restaurants because all we get is bad reviews. Yeah. Well, when you have a bad experience, you want to go online and write about it. but rarely when you have a good experience do you feel the need to go like seek out and tell other people. So
Right.
Congress is distracted by 9 million things, and all their office gets is these phone calls about DeFi and crypto. I got scammed. I lost my life savings. I can't pay my bills because of this shit coin. Nobody is calling them and saying, hey, I really like this Ethereum thing, right? And so they get this very biased lens where they feel compelled to take this parental action and kind of dive in and mitigate and restrict. And they lack the education. There's the great example of Senator Warren's office conflating MakerDAO and the DAO. Even just as recently as 2 years ago, they didn't know the difference between those two things, even though she's talked about them in Senate hearings. And so the lack of education on these complex topics and the reporting bias that they get does make it really hard for us to get the kind of legislation we want. Like we almost, while there are some politically motivated biased individuals there within these factions, there are also people coming from a genuine place of, I've only heard bad things and people getting hurt, and I don't fully understand this, but I'm trying to make it better, right? And we have a responsibility to go out and build bridges and educate and lobby, and we do a really bad job of that as an industry, and we often put our worst foot forward in a public arena, and that hurts us.
You have some pretty strong takes on this election.
Mm-hmm.
You seem to be a pretty big Kamala supporter. Am I right or wrong in saying that?
I wouldn't say that I'm a Harris supporter. I'm just maybe a Trump detractor is a better framing of it. There's a lot that politically and ideologically I disagree with Harris on. I'm traditionally lean a little more to the right, especially economically and in terms of small government. I think the vilification that the entire left has in the crypto industry is an unrealistic lens to be looking at the Harris campaign with. And I have a multitude of problems with Trump politically, but also in thinking he's not necessarily great for crypto because he's willing to say whatever it takes for himself. And so I don't necessarily believe the promises that are put on a plate. I think it's easy for this industry to say, Harris is going to come in and just shut everything down because that's what we saw from Warren. They look at parties like these monolithic things rather than groups of factions. And so I see a very different path forward with the Harris administration. And I think there is genuinely this reset. People find it underwhelming that the reset is from negative to zero, but that's what a reset is. She doesn't have to full-throatedly endorse Bitcoin. But we're at zero, and that is ours to lose, right? We have an opportunity here to build a positive relationship and get positive legislation if we engage and if we shape that correctly. We also have the opportunity to lose it.
But look, I'm not that politically inclined. I don't spend a lot of time thinking about this, but I do think the very simple fact that Trump is over here degenning and Kamala is not degenning. I think the argument that probably maybe if you say we're going from negative to zero, maybe we would go from negative to 1 or something with Trump. I don't think that's an unreasonable take. Granted, I tend to agree with you. They'll pay lip service to anything.
Yeah.
And a lot of money has come in, a tremendous amount of money has come in this cycle from crypto supporters, which honestly is kind of bizarre in my opinion, given how little the average person cares about this.
Yeah.
It's 1 in 100 people in America probably genuinely care about crypto. It mostly doesn't affect any of their lives. And yet 50% of the funding this cycle has come from.
Yeah. Which is why going from negative to zero and not being mentioned in a platform that could have mentioned us negatively is a big thing, because we're not the hot button issue of the day, right? Everybody thinks we're the most important thing, and we're not anymore. We are not at the top of this list, and that's okay. With the fact that, maybe you get better adoption or better exposure under a Trump administration for your bags. But one of the things about economic markets is they thrive on stability and predictability. We hate uncertainty. And I think even the economic and foreign policy positions of Trump, which have high volatility bands and economic models where, he's spitballing on stage 10 and 20% tariffs on all foreign goods, that volatility risk, the impact it can have economically, it doesn't matter if your bags are doing, marginally better if the entire economy reels from something like that. Crypto will feel that impact. And so I think part of it is, how do we factor in the broader platform risk and the broader stability risk? You would need to see coins outperform by several orders of magnitude to mitigate that downside risk. And so when we're talking of deltas of, maybe percentages rather than multiples, I think the stability and the ability to build a platform from zero is the more stable path forward for us long term as an industry.
Just side note on that last point. Do you see us having another bull run where coins greatly outperform? And also, if so, where? You don't have to name specific coins. I mean, you can show your bags if you want, but you don't have to. But I'm curious where you think we're headed in terms of 100x's, or if we even have those anymore.
I think we do. I think there are pockets that have product market fit that will see that. I think broadly, I kind of wanted to see this larger collapse in the market where there was more concentration before the next bull run for us to really get that. And the fact that there is such market breadth still worries me. I think unless we get a good washout of the breadth, where a lot of altcoins, Litecoin, like what the fuck is Litecoin still doing out there at whatever market cap it's at? Unless we get a washout of this breadth in the market, I think it's very hard to have the insane multiple runs. And I don't you're not going to get another 1000x multiple run on Bitcoin because the concentration absurdity, like Michael Saylor being a decatrillionaire, would just not work. People will have to start selling because their returns are so ridiculous. But I do think there's pockets of it. And I do think if we get a wipeout of the breadth of the market, then some of these major coins that are kind of just under the top players also have the opportunity to put in very high multiples from there.
Are you bullish on ETHBTC?
I'm definitely getting there. I actually just tweeted this morning. I think it was TLX launched their new 10x tokenized ETHBTC ratio token, and I'm looking at that ratio and thinking we're kind of getting to that point where I might want to be buying. I think if you asked me 10 years ago, I would have thought Bitcoin makes total sense and can run forever. But the stagnation of ideology and technology in the Bitcoin ecosystem is something that has always worried me. And I think it has an incredible brand power that will keep it far above. It's a brand premium rather than a monetary premium. And so I think it will always do well, but I don't think it will always lead by this factor. And I do think a kind of flippening is still on the table for systems of economic value over assets. Because at the end of the day, Bitcoin is an asset. And while that can be very big, I do not believe that the total addressable cap of that can continually dwarf an entire system of assets.
Were you surprised at ETH dominance in the past, Bitcoin dominance in the past 2 or 3 years? Like, was this surprising you or not really? I mean, this does tend to happen, but I'm just curious. And maybe in relation maybe to ETHBTC, like, did you expect a better performance from ETH through the bear market and sort of this pseudo bull market we had with the ETFs and whatnot?
Yeah, I would have expected a little bit of a better performance, but hindsight being 2020, I think the complexity of Ethereum's pitch versus Bitcoin's is what has caused a very different adoption curve among more traditional investors, nation states, things like that. Like I can kind of get why Bhutan and other countries are having stockpiles of Bitcoin. Like, I think that makes sense in these places that have weak and volatile currencies and have stores of gold. I can get that premise. So
also Bhutan has like an excess of hydroelectric energy. Like I think they mined a lot of their Bitcoin.
Yeah, they did.
Which is sort of the that gets me, excited on like
that
the
is
general
exciting.
premise, right?
I think that's a great system until, future economic security problems. But I think the value proposition of Ethereum is one that has to be delivered on a lot more for it to make sense. And so I don't know if it was Ethereum underperformance so much as Bitcoin overperformance in a time of political and economic uncertainty in developed nations. Record high inflation, changing monetary rates, stress in currency deltas between US and Japan. And I think, therefore, looking for non-fiat currencies was a very, very logical thing for a lot of countries to be doing. And so I think that maybe in terms of price to value, many cryptocurrencies were on track, and it was more Bitcoin outperformance than anyone else underperforming.
We have digital gold, right? People talk about this all the time. Like, what should be the meme be, right? It's like quite simple. Digital gold with Bitcoin. What's the pitch for Ethereum?
I mean, I don't mind the whole digital oil one.
Yeah, but people don't stockpile oil.
I mean, except for the strategic reserve. I think at the end of the day, there isn't an easy pitch for Ethereum. And that's why Ethereum has to deliver and show and put its best foot forward. You don't buy Ethereum because you want to buy Ethereum. You buy Ethereum because there are things in the ecosystem you want to use. And that is a much higher deliverable burden for us. The vision has to be delivered on. Whereas Bitcoin, you still buy it in a hope that it is that store of value, in a hope that it is the future of monetary soundness and things like that. Whereas Ethereum has to deliver before it necessarily makes sense. It's the show me crypto.
Is there anything you would change about? I know you mentioned you thought it was a bad idea to start tinkering with the issuance curve like this early, and I mean I just personally completely agree. It's like there's a lot of commitment and resolve to push some idea or narrative, and then within 6 months it's they're not burning enough feed, the people are panicking. Is there anything within the current economic model of Ethereum that you think is that you would change, or do you think we have to see how it plays out for a while? DA pricing, once again, is what I come back to. Other than that, probably not. I think anytime that we want to change the economic model because we don't like the price rather than the economic security reason, we failed. And that's my biggest gripe with people who are like, oh, change the issuance curve. Their number one argument is my bags aren't going up. That's not the right motivator. If you had a sound economic reason for how do we get more validators to better decentralize the network footprint, it's by changing this issuance curve. Now I'm interested in having a conversation. But if it's because of the price right now, I don't necessarily think that's a strong enough reason, and we should let it play out more. The other thing is price isn't always the accurate reflection of present day value, right? For any number of factors, a price can be depressed or inflated to its true value because of other economic situations that are going on, because of other attentions, because of liquidity problems. And then you might find that after a year of this value capture, it kind of snaps back and gets more on track. So I think such short-term focus on the price and saying we're not capturing the value is also just this cognitive bias. I tend to agree. Let market forces play out. I would say in proof of stake systems, price is sort of intrinsically attached with economic security. I jokingly tweeted the other day that it wasn't jokingly, actually, it was quite serious, but Ethereum had lost 20% of its economic security since some tweet I saw, despite the stake rate going up. So, I mean, I think it's more than enough to secure Ethereum. It went from 100 billion to 80 billion. This stuff isn't, I don't think this is panic attack by any means, but there is obviously a connection there between the value of Ethereum and the economic security.
But it's it's a rolling value, right? You can't just take the price on a certain day.
No. And I completely agree. The one thing I would say though is and this kind of goes back to the monetary premium aspect. I'm curious to hear your thoughts. I honestly think that valuing ETH on its earnings, even mentioning that was a terrible idea.
Mhm.
Like, and this is why I think that monetary premium aspect is important. Like, to the extent that it can actually capture this this kind of narrative. But it's like, if you look at the earnings, right, in quotations, like relative to the price, you're like, oh dear, this is trading at
300 million P&E. Yeah,
exactly. So I don't know what you think about that.
I think as an investor who like tweets a lot about Ethereum's economics, this is going to sound super hypocritical, but when we talk about Ethereum as money and finance, we probably are making a mistake. And I think it's the duty of people who build on Ethereum, or rather build Ethereum, to not think about it through that lens, right? Because it is all about what value add comes after, right? And Ethereum isn't valued because of Ethereum. It's valued because of the afters. I don't buy a light bulb because I like light bulbs. I buy it because I want to read in the dark. And so all that matters really is, what is Ethereum as an ecosystem delivering me, right? And we need to optimize towards that. I think this whole monetary conversation, this whole earnings conversation is often a mistake because we're looking at this financialized KPI, which might not be the right path forward. And I think that monetary premium is the right way to go. And I think one of the things I find fascinating on the base rollups, if I go back to that, is this idea that we might be able to separate validator demand for new Ethereum and new validators from the issuance curve, right? Because right now, the more Ethereum that gets staked, the lower the rate goes, less interested in putting together a validator. But if that L1 validator is also validating a number of rollups, I might be able to get an 8 or 9% yield while the actual Ethereum issuance has dropped right down to a 1% yield just because it's coming from these other chains. So now there is still this intrinsic demand for Ethereum without that issuance. And I think that model is really compelling. I think that issuance curve to lockup ratio being so tightly wound to one another is problematic. And I think having this additional value add for validators becomes very interesting. Same with pre-confirmation staking and things like that. The more ways that these L1 validators can diversify income.
Like the more ways to just reduce the velocity really like of unstake. I mean, that if you were taking that model. Yeah, but I think obviously like base rollups are going to add additional complexity, additional hardware requirements more than likely to these validators. And I think that would be the counterpoint. I don't know.
I mean, sure. But
which maybe seems like you're willing to, I tend to agree, but it seems like you're willing to kind of, what you said at the beginning, push the hardware requirements then. And
well, so I don't agree with pushing the hardware requirements for Ethereum L1s, right? And so as long as an Ethereum L1 can always choose to just validate Ethereum and have minimum specs, that's great. If you want to go out and buy bigger hardware because you want to opt into also validating base rollups on top of that, I think that's a totally fair consumer choice to do. I don't think it should be a requirement. I would want to see the separation of those requirements.
Do you run an ETH validating node?
Yeah, I've got a few.
Way to be a solo staker. Is it like what you don't run it on a Raspberry Pi? I would assume.
No, I've got a few co-located boxes in different locations.
Oh, okay.
Yeah,
interesting. Okay, well, is there anything we didn't touch on? I thought this was great. We hit on a lot of subjects. Which, you are an expert on everything, so I
everything
can just ask
under the sun. Yeah, go for it. No, I mean we could talk about a lot more things, but I think we've had a good hour.
We'll have you back
already.
on it. We'll have you back on in like a year.
Sure.
We can talk about the continuously descending ETH BTC ratio.
Right. You know what we could do? We could do an election show. Gwart election coverage.
Yeah, it's going to be terrible. It's going to just be like it's going to be complete conjecture, but I'll bring you on and we can riff.
Fantastic.
All right. Well, thanks for coming.
I appreciate the time.